Yeah, and when it comes to valuations, I mean, I know Tesla, it has a lofty valuation. I mean, we've had guests on who think it's worth $25, basically, which seems significantly an undervalue for a name like Tesla. What kind of stocks do you think can have some upside potential in the world of autos, here or abroad?
Well, I think there's three to look at right off the bat. First, let's get real on Tesla. Most profitable auto company in the world, growing 40% year over year. They'll be over 100 billion this year. They're trading at a 7 or 8x multiple. That's not bad for a company with numbers that look more like a tech company than an auto company.
The headlines have been filled with juicy news about Tesla lately, from the upgrade of the Model 3 to fresh new Optimus, the Tesla robot, and even Morgan Stanley raising its price target on Tesla. There's so much positivity in the air, and this could be sufficient to push Tesla's stock price to very interesting levels. So stay with us as we dive into the latest happenings with Tesla and the potential impacts that this could have on the Tesla stock price. Today, we've got some pretty exciting news on the Tesla front, and it's all about the buzz around the electric car leader. Tesla has been making headlines with its advancements in AI, battery technology, EVs, and space exploration, and we think these updates are going to have a positive impact on Tesla's stock. For instance, Tesla announced that it's working on an AI robot that's going to be able to perform tasks that are dangerous, repetitive, or boring for humans. A project demonstrates Tesla's leadership in AI and robotics, and could open up new markets and revenue streams for the company in the future. This could be something that could happen for Tesla, and the end will be absolutely phenomenal.
Take a closer look at the automakers, the U.S. automakers, in light of the UAW strike. The beneficiary, perhaps, would be Tesla. Steve Wesley, founder, managing partner of the Wesley Group, sat on the board of Tesla at one time and has a good view of what's going on here. The UAW strike is expanding now. When we look at this now, you have about 25,000 workers striking, and they are expanding. Your thoughts on this part of it? It's going more into GM and Ford, less into Stellantis at this point. But the point is, the strike is on until they make a deal. How big of a deal is it, and when does it become a big deal?
Look, I think it's already a big deal. And look, we all want to see American workers earn higher wages. But it's coming at a tough time for Ford and GM, and here's why. First, Ford and GM are both struggling to sell just 100,000 units in 2023 here. And that's compared to 2 million units for Tesla. So they're supposed to be catching up here. They're at less than 5%. So if those numbers drop down, that hurts. Second, Tesla's triggering a global price war. And I think we've seen it. Tesla's had 6 cost reductions this year alone. General Motors, Volkswagen, Ford, they're all trying to keep up. But remember the big picture. Not only is Tesla selling a lot more electric vehicles, but their net margins are 12.9%. Compare that with 6% at GM, 4% at Volkswagen, 2.4% at Ford. If you're raising rates, costs at those companies, that's coming at just the wrong time. Now, the good news here is for consumers. Tesla sees an advantage. They're seizing it. The Chinese, and we'll come to that, BYD are doing the exact same thing, driving costs down. EVs are going to be cheaper than ever before, but it's going to put the squeeze on automakers with high cost structures. So GM and Ford need to be careful. Yeah. This will be an interesting one to watch.
Tesla is one of the most innovative and visionary companies in the world, and its recent updates show that it is not slowing down in pursuit of excellence. It's like the universe is giving Tesla a cosmic high five, as market signals are pointing towards a bright and sunny 2024 for Tesla. Positive vibes all around. This could mean exciting things for the company and its shareholders in the years ahead. Hey guys, welcome back to Tesla Tomorrow. According to recent news, a leading bank just kept their long-term bullish stance on Tesla. A recent note by Deutsche Bank highlighted meaningful downside risk to the Wall Street consensus based on the prospect of limited volume growth next year. The bank trimmed its price target from $300 to $285 per share, but noted that while near-term fundamentals may present challenges, it does continue to view Tesla as an electric vehicle leader in the automotive sector. The bank also further noted that companies like GM and Ford do potentially carry a heftier labor cost disadvantage going forward. It believes that this could place Tesla at an even better competitive cost advantage to the incumbents who are only in the beginning of their EV transition. In its note, Deutsche Bank pointed to one critical growth factor for Tesla stock, which is the progress of their next-generation platform for a smaller and more affordable model. And we think that not many people actually realize how big of a deal this is. Tesla is making waves in the stock market, and there is a lot to be excited about, so whether or not you're an investor or just a fan of the car company and its revolution, it is a thrilling ride for Tesla. Before we carry on though, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. First up, let's talk about the stock market. Tesla stock is a little on the adventurous side recently, and it's climbing up over 1%. Now that might not seem like much, but in the world of stocks, it is a big deal. Investors are keeping a close eye on this, and it's not just about the numbers. There's a real buzz in the air. Bullish options are actively lighting up, and the trading scene is buzzing right now, and it's got investors and enthusiasts alike feeling pretty optimistic. For instance, Tesla is working on upgrading its gigacasting technology, allowing it to die-cast almost any vehicle part under one piece. It's pretty nuts. This technology will reduce the number of parts, weight, cost, and complexity of Tesla's vehicles, and improve their performance and safety. It's also going to enable Tesla to produce more vehicles faster and more efficiently, and will help it meet the growing demand for its products. Tesla has updated its best-selling Model 3 with more range and sleeker looks. The Model 3 now has a range of 423 miles on a single charge, which is more than any other EV on the market. The Model 3, which is Tesla's most affordable and popular vehicle right now, has a new front fascia, headlights, taillights, wheels, and interior design, and all these improvements are going to make it an even more attractive and competitive option for customers. These are just a few of the recent updates from Tesla, and they show us why it's one of the most exciting and promising companies in the world, and they are potential reasons as to why Tesla stock is likely to continue to rise and reward its investors. But hold on to your seats, because there is a fun twist. Tesla, you know that company everyone seems to have an opinion on? Well, it's currently the most shorted stock in the market. Short positions are like bets that the stock price will go down, and right now, these bets are worth a whopping $2.33 billion. That's right, it's like a game of tug of war with this stock, and everyone has a stake in it. Will the shorts win, or will Tesla keep on soaring? Well, we're gonna find out in a moment, but for now, let's see what the experts have to say. For one, Piper Sandler, one of Tesla's biggest fans, is growing very optimistic on the automaker, and they're sticking to their guns with an overweight rating for Tesla and a cool $300 price target. It's a bit like saying, we've got faith in Tesla and we think it's going places. Analysts often influence investor sentiment, so their confidence in Tesla's future is quite reassuring. Interestingly though, it's not the first time they're having something good to say about Tesla. A recent projection for this firm stated that Tesla could bring in around $885 million in supercharger revenue next year, and $10 billion annually in a decade. And this exponential increase in Tesla's market cap and revenue will be the driving force for the stock price in the future. Tesla's stocks and shares have more than doubled this year as investors have responded favorably to its decision to open up its charging network to EVs made by other companies, as well as its strategy of cutting prices and sacrificing some profits in pursuit of more market share gains. Therefore, with further gains from superchargers, Tesla's stock price can respond even more positively than it already has. And here's another little gem for all you car enthusiasts. eBay Motors just spilled the beans, revealing that the Tesla Model 3 was the fastest selling used car in September. Looks like EV users just can't get enough of those sleek Tesla designs, and demand is revving up. This not only shows that Tesla's popularity is also there, but it does hint at the longevity and desirability of their vehicles. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.